You know, when you look at Tesla right now, it's like you're seeing two totally different companies at the same time. On one hand, you've got this incredible story of a futuristic AI and robotics powerhouse that's about to change, well, everything. But then there's the other story, the one about a car company that's hitting some serious bumps in the road right now.
So that's the big question we have to ask, right? If you're thinking about investing in Tesla, which company are you really putting your money on? Are you betting on that amazing dream of what's to come? Are you investing in the nuts and bolts of what's happening today?
All right, let's dive into that future vision first. This is the big AI dream that's getting so many investors really, really excited.
And hey, a massive piece of that puzzle just fell right into place. Tesla actually launched its robotaxi app. I mean, anyone in the US can get on the wait list right now. This makes it so much more real, you know? It's not just some far-off idea anymore. It's a real, tangible step towards a future of self-driving cars.
Think about what this means for the business. It could change everything. Right now, they sell you a car one time. It's a one-and-done, lower-margin deal. The goal here is to switch to selling you rides over and over and over again. That's high-margin, recurring revenue. Suddenly, Tesla starts looking less like a car maker and a whole lot more like a high-tech software company.
But believe it or not, the vision gets even bigger. It goes way beyond just cars. Elon Musk himself has said that the real treasure isn't even in transportation, it's in robotics. He thinks the Optimus robot, their humanoid robot, could open up a market that makes everything they've done with cars look tiny by comparison.
Okay, so that's the dream. It's a pretty incredible one. But for every bit of that future optimism, there's a dose of cold, hard reality based on the numbers from today. So let's flip the coin and look at the challenges Tesla's up against right now.
So it's this real clash, isn't it? On one side, you've got this exciting, world-changing stuff like robotaxis and robots. But on the other side, you've got the business that pays the bills today, selling cars and making a profit. And that side of the equation, well, it's feeling some serious heat. Just look at the second quarter. The money Tesla made just from selling cars, it dropped 16% compared to last year. Now, for any company, that's a concern. But for Tesla, a company whose whole value is built on the idea of insane, nonstop growth, a drop like that is a huge red flag for investors.
And it's not just about sales. The pain goes deeper. Their operating income, down 42%. And get this, free cash flow, that's the actual cash they have left over to, build that future, it plummeted by a staggering 89%. That's the money they need to fund the whole AI dream. And all of this is happening while competition is getting fierce, forcing them to cut prices, which just squeezes their profits even more.
So it's probably no surprise, right? This massive split between the dream and the reality has Wall Street analysts totally divided. They just can't agree on what to make of Tesla.
You've got the super optimistic camp, the bulls, like the folks at Wedbush. They're saying, forget the car stuff, this is an AI stock, and they're slapping a massive $500 price target on it. But then you have the more cautious camp, the bears, like Barclays, who are looking at the current numbers and saying, whoa, hold on, the fundamentals are looking weaker. The middle ground, the median price target, is sitting around $306, which tells you a lot of experts think there's some real risk here.
So, where does all this leave you, the investor? Well, it really boils down to a fundamental choice you have to make if you're looking at Tesla right now. The story of Tesla is really a tug-of-war. It's the dream of tomorrow pulling against the reality of today. And investing in the company right now, it's really a bet on which side of that rope is going to win out.
And here's the tricky part. Both of these stories are true at the same time. That's the real dilemma. So the final question you have to ask yourself isn't just, will the AI dream come true? It's, can the company get through the tough times now to even make it to that future? It really comes down to this, future potential versus present value. What's your choice?